Chandra gearing up to highlight and address the media in just seconds from now. I think we can cut across.
Earnings for Q4 and the annual FY16 numbers. I think we have ended the year on a much stronger note, both from a quarter perspective, financial numbers perspective, and also the momentum in the key segments. The overall revenue growth for the quarter was 4% in rupee terms, 2.1% in CC terms, and 1.5% in dollar terms. And the net income on a sequential basis was about 3.8%, and the operating margin was at 26.1%. The key highlights of this growth is three important segments came in very strongly. From an industry perspective, BFSI came at a CC growth of 3.2% on a sequential basis. And from a market perspective, both North America and continental Europe did very well. North America did 2.4% and continental Europe around 3.5%. And our digital revenues continued to do extremely well, and it contributed to 15.5% of the overall revenues. There have been very good client additions in all the revenue bands. On a sequential quarter basis, we added 3 more clients in the 100 million band, 8 more clients in the 50 million band, and 17 more clients in the 10 million band. Had one of a strong gross additions in terms of employees, 22,576 associates, and finished the year at 353,843. Our annual wage hikes have been announced. At the higher end, people will get around 12%, and on average, they'll get about 8%. Moving on to annual performance, we crossed trillion rupees, 108,646 crore, a year-on-year growth of about 14.8%. On the CC terms, about 11.9%. Our net income increased to 24,215 crore. Our operating margin for the year stayed in the band at 26.5%. Our India market revenue crossed $1 billion in the quarter, and digital revenues for the year at 2.3 billion, over 52% up on a constant currency basis year on year. Our growth on an annual basis was very strong. In BFS, 14.8% on a year-on-year basis on CC terms, life sciences 20.6%, travel, transportation and hospitality 17%, and manufacturing 15%. Very strong client addition, 100 million clients, we added 8 for the year, and 20 million clients, we added 11 for the year, and 10 million, about 37 additional clients. Again, highest ever gross addition for the year, and our training target of digital skills based on our digital learning platform, we had a target of 100,000 for the year. It was well over the 120,000 people, over a very, very large number of competencies and around 400 different technologies. So I think we are exiting the year with a very good momentum in BFS, continental Europe and US, and some of the other sectors. And one other thing that I want to cover is about the court case where the jury verdict went against us. And we have given a detailed press release, and the matter is with the court, so I won't be able to answer any question with regard to that. So we will talk about that as and when that gets decided. So I would avoid any questions on that, and I'll appreciate if we can restrict the questions to business momentum and business performance for Q4 and FY16. Thank you so much.
Thank you, Chandra. We'll start with the Q&A. The first person up, Reema Tendulkar from CNBC.
Congratulations, gentlemen. It's after 6 consecutive quarters of a miss this time around. TCS performance is likely to be industry leading. You've forbidden us to ask on the Epic system, so let me come back to business. 2.1% in constant currency, if you could break that up in India as well as what the international business has done. And this gives you a strong exit rate for FY17. In 16, you've seen about 11.9% constant currency revenue growth. Would you believe that with this kind of an exit rate, F517 should be better than F516 based on the visibility you have?
I think if you ask the 2.1% CC where it has come from, as I said, North America has done 2.4%. Continental Europe, I think it's about 3.5 or 3.6%. We have done exceedingly well in MEA at about 9%. Middle East Africa. And our India is a little over 2%, just at the company average. So I think that's a very good news. And the UK is slightly down or flattish, primarily also because of the hit that we said we'll have in Diligenta. So we believe that all these markets are better than the curve we had in the earlier quarter. So I think it should be a good year. Coming specifically to your question, we don't give guidance. So I'm not going to answer whether it will be a better year, but we can tell you that it will be a strong year.
That's good to hear. Rajesh, what was the reason for the margin decline by 50 basis points? Because we did see the rupee depreciation benefit. So if you could break up the margin for us. And also wage hikes, what kind of an impact will it have on your margins in Q1?
So the margin performance has been very good, both for the quarter and for the year. We are exiting with a margin which is very tightly within the band that we had put. For the year, we will be at 26.5, which compares quite well with where we were for the last year at about 26.9. So it's about 30-40 bips down. For the quarter, we are exiting at about 26.1, still which is fairly well within the range. When we look forward, wage hikes have been announced, which is almost in line with what we have done last year. And the impact of that on the margin should also be similar to what it was last year.
The margin decline on a quarter-on-quarter basis?
Hardly any decline if you were to actually look at it. It's about 30-40 bips. But the idea of specifying a range of 26 to 28 is to give us the operational flexibility to manage our investments and business mix as we consider it appropriate.
Chandra, BFSI, channel check suggested that client budgets in BFSI have actually come down or, under pressure. But you've positively surprised with the BFSI performance. Has insurance turned the corner in Q4? What led to it? Do you believe it's sustainable? And even the contribution of digital revenues is now 15.5%. It was about 14% in prior quarter. What was the growth? And take us through the portfolio challenges which you alluded to earlier and what the status on it is now.
See, I think BFSI has had a very strong quarter at 3.2%, which is on a CC basis 1.1% ahead of the company. And insurance has turned the corner. Okay, we are getting growth in insurance, and the core BFS is doing well, which, as I said, delivered a 14.8%. So when we had the Analyst Day, we did say that our BFS is going to do well, and we see a very good pipeline. There are three important themes. One is a digital theme. The second one is the simplification and efficiency theme. And the third one is the regulatory theme. While all the three themes continue, all of them are related in one form or another, but the digital theme is picking up momentum across sectors. Okay, if you see the kind of engagements that we are signing, we signed the largest cloud transformation deal, both in the private cloud area and in the public cloud area. So whether it is analytics, whether it is cloud, whether it is channels, we believe that the momentum is good, and that's what is also reflected in the growth in the contribution of the digital to the overall share. So we believe that we are exiting with a good momentum as far as BFS is concerned.
And the other headwinds which you'd earlier...
So in terms of the headwinds, I had talked about insurance, which has turned the corner. Diligenta, I think we are more or less at the bottom. From here, we don't expect to go down. let me put it this way. From here, we don't expect to go down materially at all. So it's turning the corner, but it will be from here, flattish upwards. Then in terms of Latin America has been doing well last quarter, and this quarter also they've delivered growth. And as we go into the next year, it looks good. And our energy and utilities has done well this quarter. And as we go into the future, we expect that the energy, utilities, resources, utilities business will continue to do very well. So Japan, I think we have to give it some more time. We don't expect a huge decline in revenues in Japan, but I wouldn't say that the momentum is predictable to say that it will be a positive, significant positive momentum. But overall, I think on the one hand, we are exiting the year slightly lower. In fact, lower, more than a percentage lower this year than last year. But the number of headwinds we had last year, those headwinds have been taken care of. So we are not having any specific headwind, which I can say that is going to cause major problems. Telecom and media also, I think, I'm not going to say that it will have a top-of-the-line performance. We don't have a headwind in terms of negative growth. You see that in the results this quarter, while it is a 2.2% CC growth, most of the verticals have grown, except high-tech. Most of the verticals have delivered growth.
Neha Botsra, ET Now.
Good evening, everyone. Could you share a bit more color on the digital business with respect to this quarter? We saw it contributing around $2.3 billion. Are you happy with the growth, and do you see this momentum being maintained in the coming quarters? And as far as this fiscal is concerned, what revenue contribution do you expect from this particular area? Could you share some outlook and some more color on this?
I think, as we said during the analyst meet in March, we are seeing digital becoming mainstream. So we have been saying it for quite some time that digital is going to be the way the future is going to be, whether you talk about financial services or retail or B2B companies. And there were different packets of growth. You used to see growth in analytics, you used to see engagements in mobility and so on. But we said that when the momentum starts to pick up, all of these things will come together so that you are able to talk about a digital transformation journey of your client, and that is beginning to happen. So we are very happy with our digital growth. It's a 52% growth, 52 point something % growth on a year-on-year basis. I see this momentum to continue. Also the deal wins that we are seeing all really tell us, both the number of deals and the size of the deals in digital tell us that this momentum is going to continue.
Also, speaking a bit about the margin, it stands at around 26-28% band. Do you see this being maintained, considering that there could be some pressure on this front? So could you add some...
Our stated goal is to be in the 26 to 28% margin band on an annual basis. As Rajesh said, we will make some calls in terms of what kind of investments we do in a particular quarter, especially when we are building out new capabilities. Sometimes we may have to make some additional investments. Those kind of things and calls we'll take, but we are pretty confident that we'll remain in the band.
Mm-hmm. Also, you've added around 90,000 employees in FY16. Could you share outlook for the FY17?
So I will say this, I'm not going to give you a number, but I'll say two statements. One is that we have, Ajay has already announced last time when we met, that we have given offers for about 45,000 trainees, and typically we get about 30 to 33,000 trainees joining us in that band. Some of them may go for higher studies and so on and so forth. But our lateral recruitment, overall gross addition this year will be much lower than the year went by for three reasons. One, we think that our attrition is trending down. The steps that we have taken are yielding results, and our IT attrition has come to 14.5%, the lowest in the last 4 quarters. The second, we are seeing significant opportunities for productivity. And the third, we believe the technologies that we have in terms of machine learning, automation, are helping us to transform. And all of these things put together, we will have a much, much lower ad this year than last year.
You did touch on this, but if you could share some more details on demand outlook in terms of the verticals and geographies, and also do you see any blind spots?
So the reason they are called blind spots is because I can't see them. so they may be there, I don't see, and I can't comment on that. But as I said, from a market point of view, I'm quite happy where we are. North America, the momentum is very good. And continental Europe, our momentum is back. And the UK should do better because Diligenta drag will not continue. And Middle East, Africa, and India, Latin America, all of them are in a decent shape. So I believe that the geography perspective, the momentum is good. Vertical perspective, we already said BFSI is strong, manufacturing is strong, life sciences is strong, retail, consumer goods, and travel are strong. And telecom and media, we need to see. I don't expect any headwinds at this point, but I need to see the momentum as we move forward. So I think we are in a pretty good place exiting FY16 compared to where we were 3 months ago, 6 months ago.
And on the pricing front?
So I think we've delivered the whole year. I think Rajesh has been saying it for quite some time. It's flat year, right? Flat pricing. Our 14.8% growth is pretty much volume driven.
Pankaj from NDTV.
Hi Chandra, this is Pankaj from NDTV. I just wanted to understand about Q4, touching on the pricing bit. Volume growth was 3.2. Did realizations drop in Q4, which was the reason?
About 1%, yeah.
Yeah, and that was the reason why margins came in toward the lower end of the guidance?
No.
So, as I said, margin is a more complex one in terms of where the service mix is. Realization and pricing are two different things. What you said is realizations are down 1.1. Realization is a mix of whatever the number of working days are and does not automatically translate to margins. So you've got to make a distinction between pricing and realization. Realization is what it is. And realization on a full year to full year basis is very stable and has been stable for the last 2 years if you look at it. This year also it's down by 0.1%. So we are in a fairly stable pricing regime.
About the India market, it has been very volatile. Continues to see volatility in Q4 also?
So we've done well. I think it's grown over 2% on a sequential basis. So it's good. But I think as we move forward, I can't predict the momentum to be consistent, but on a year-to-year basis, it will do decently well.
And just a word on BFSI. The momentum was strong in Q4. Do you believe that will continue for 17?
Yeah, we think so. Based on all the information we have, whether it is BFSI, whether it's continental Europe, North America, the key 3 markets which I get asked about all the time. Based on where we are, we think momentum is going to continue. Our pipeline, our closures, digital wins, all of this indicate strongly that.
Shilpa from Bloomberg TV.
Hi, my question would be, do you see any impact of the pound on your margins this time? And how do you see it going forward? I know you can't predict whether it'll go up or down, but do you see an impact going forward as well?
So if you look at how the currency has moved, the rupee has primarily appreciated against the pound, and whereas it has depreciated against almost all other currencies in our basket. So any appreciation of the rupee against the pound obviously will have a flow-down effect on the margin side of it. But we are coming in for a very dramatic event, end of the month, end of June. So we'll have to wait and see how it how it translates. We believe the volatility is due to that event rather than any underlying weakness in the overall economy. And this volatility is likely to pass after the event, and we'll see a more stable regime towards the later half of the year.
And you spoke about, how how well digital is growing and about the deal wins there. But if you could run us through what are the other major deal wins and in which sectors were these majorly, in which segments?
So we've given most of them in the press release. So we've given a long list of deal wins, digital deal wins, etc. You can look at the press release. And see the currency movement also has affected the top line from a dollar reporting perspective. On 11.9% CC growth, we lost about 4.8% in the cross currency. So our dollar revenue for the year was that much short.
Thank you.
Next, we have Shivani from Business Standard.
Good evening, gentlemen. Congratulations. Chandra, I know you did say that you wouldn't want to comment on the jury. I'm not asking a question on the jury judgment. Just want to understand, has this led to a concern among client group, and have you addressed that, or are you reaching out to them?
I mean, as you'd expect in these situations, and we will deal with the situation. Currently, I think, we are in touch with the people we need to be in touch with, and we don't see any major issue.
Right. On the business side, you said India has crossed 1 billion, but the cyclical nature that you have always been talking about, that hasn't changed much. Is that fair to assume?
Yes, because in the past when I have said that it's changing, it has not happened, so I would agree with you. But having said that, I think our portfolio is strong. We have a combination of corporates and our government business, and also our platform businesses. So all of these three aspects are growing in size and scale now, and we also fully integrated CMC. So there's a lot more synergy. So I think all of this should help us to deliver a decent year, though I won't rule out a bit volatility between quarters, but our India team is very determined, and they've done well, and they're extremely determined to remove the volatility.
Right. Ajay, attrition rate is slightly on the higher side, especially when we have seen TCS having attrition of 12% and having an industry lead. Do we see that coming down in the next fiscal year? And two, what have been the variable pay component for the quarter and for the year?
Let me announce the second one first. The variable component is 100% as far as this quarter is concerned. Now, see, attrition, if you look at, as Chandra mentioned, it is, if you look at the IT attrition itself, that has come down to about 14.5. And overall also it has come down to 15.3, 2 consecutive quarters of attrition showing a downward trend. So I think we are in the right direction. Plus, if you look at the quarterly attrition, last year Q4 versus this year Q4, you'll find a jump of about 70 bips, it's come down. So the direction is absolutely correct. And I think as we go forward, the attrition is going to come down, and that is why Chandra mentioned when we talked about our hiring next year, where we have taken all that into account, and that is why we are saying that our hiring next year gross would be considerably lower than what we have done as far as this year is concerned.
Right. Rajesh, could you give us a breakdown of the margin impact? That would be a bit helpful.
Margin impact for next year?
For this quarter, that is.
This quarter, as I said, we've been in a fairly tight band. We have impact due to currency of about 60 basis points, and overall we are ending with about 50 bips down. So nothing much to talk about on the margin side. Mostly it is on the gross margin. We are about 90 bips down on the gross margin, made up about 30 on the SG&A. And as we cycle through this whole investment phase of new service lines, you would see some volatility on the gross margin side, which is typical for new service lines.
Joshel from ET.
Sir, congratulations on the results. Sir, I was wondering about the India revenue. You said you have a good portfolio mix between corporates and governments. Sir, can you break it down for us a little bit? How much of the percentage comes from the governments versus how much comes from private enterprises in the country?
We don't give that figure, but I'll tell you, roughly you can assume, I'm not really being very specific, but roughly you can assume that the corporate business is 4 times the government business. 3 to 4 times. Okay? Huh?
X plus 4x.
Yeah, I can break it down, but I know the numbers, but I don't want to do the math now.
Alright. Sir, and also this year, as Ajoy said the hiring is going to be lower this year, gross hiring as compared to last year. So you said it's also a factor of attrition and also automation, I believe. So how are we supposed to look at that number? Is automation now going to play a role going forward from this year? Should hiring decrease year over year?
Yeah, see, if you look at our revenue per person, incremental revenue per person, for the last 5 years, we presented it on a calendar year basis. It's there in our presentation that we put out after the March meeting. It has considerably gone up. The incremental revenue per person for last year crossed $100,000, if I remember the exact number. So we have been at it for some time, and automation will play a role, and definitely the gross addition and the net addition numbers will. I don't want to project for next 3 years, 4 years, but I've given you in a trend this year. So let's take it as it comes, because we've got some goals and targets, and we see some opportunities. So we'll see.
Sir, and one final question from me. So you last time, a couple of quarters ago, you said platform revenue from all the platforms was around $500 million a year. I believe you said that at the Morgan Stanley when you gave that keynote. So can you give us a sense of how much platforms are now contributing to revenue and what is the growth there?
See, I think I don't know which 500 number you're referring to. See, we have products and platforms. There are two types. There is a banks product, which is our core banking platform. And last year we shared with you the number for digital platforms, which is excluding blanks. And we said it crossed about 125 million, and that has grown about 38% this year on year. Doing well.
Thank you, sir.
Varun Sood Mint.
Hi. Hi, Chandra.
Hi, Varun.
3 quick questions here. Firstly, Diligenta, Japan and Latin America, it has underperformed for the last 1 year, and you've grown 7.1%. So if I could just ask you, how big are these 3 together, and how much did it hurt your annual growth? Say, even if they would have remained flat.
So I'll answer the question straight away. So right off the bat, I want to correct some perceptions. First is that the number I would like to talk about is the CC. It's very difficult for me to talk dollar, because if you take the last 5-6 years, I have gained in dollar, I have lost in dollar. The gain or loss every year has been a -1 to +1 range. My CC growth will either go down by 1% to get the dollar figure, or go up by 1% by dollar figure. And so even if people reported on dollar and did not worry too much about constant currency, the reporting will have an aberration of 1%. But for us, now, this year it's about 5%, almost 5%, 4.85 or something like that. So to talk about the dollar, on which I have no control on the cross-currency movement, it's very difficult for me. So allow me to talk about with respect to constant currency. So roughly on constant currency terms, and also second correction I'll make in a statement, we talked about headwinds in Diligenta in great detail. I don't know whether it's Q1 or Q2, I think. Since then, Latin America has nicely recovered. So Latin America has delivered a decent quarter. You can't say it was a total laggard. Okay, it's done decently. But suffice to say that the weak spots in a weak portfolio, that's not the core, and the businesses we are trying to develop, whether it is a Japan, whether it is a Diligenta, and we had some headwind in the telecom, they have contributed to almost 2%. We lost.
Telecom, Diligenta and Japan?
And telecom, Diligenta, and I think it is Japan. Yeah.
And sir,
Japan, Diligenta, and I think it's telecom.
And how big would be Japan and Diligenta?
See, Japan is roughly about 550 million or so.
Thank you. So the second question is, in the July quarter, you had said that your order book was the strongest, 30% than it has ever been. Would it be fair to say that by the first quarter of next financial year, you could at least get some incremental revenue? All outsourcing contracts are multi-year, I understand. But at least for the first year, we expect 3 to 4% for any of the IT firms. So can we say by the first quarter, you would be getting the first material impact from that strong order book which you had?
See, Varun, I'm not going to get into guidance. Don't push me towards guidance. So, without giving you any percentage growth, etc., I would say that the negativism we had in certain segments is gone, and the momentum in the core areas which are doubtful, so very large for us and also doubtful, is not there. So we should do well, and I expect the revenues to kick in. As far as where we stand today and all the information that I have, momentum is good.
Excellent. Just fine.
I won't be able to say whether it is 3%, 3.5%. I won't be able to say that.
No, I was just trying to understand from the large order books. But finally, sir, most of the headwinds have been taken care of. You don't give guidance. I'm not going to ask you on the guidance bit. You're stepping into a new financial year, maybe perhaps a lot better than 12 months back when you asked.
We are exiting the financial year at a poorer exit rate this year.
Why is that, sir? Help me understand, because your growth is stronger.
No, but if you look at if you do the spreadsheet and calculate the exit rate, our constant currency exit rate at this Q4 and dollar exit rate also, both will be lower this year than last year. But we had more headwinds as we exited last year, and we don't show these headwinds this year.
So if I can ask Q1 to be better than Q1 of last year, I'm not asking for guidance.
That is guidance.
We want.
Thank you, Varun.
Thank you, sir.
You are very persistent.
Himang Sharma, Reuters. He's gone.
Hi, sir. I know you can't specifically talk about the lawsuit, but I'm just wondering what will be the accounting treatment for the 940 million the liability that arises, and will that have any impact on profit going forward?
The accounting treatment is as per the accounting standards, and what you see is that we have completely declared that in our contingent liabilities. You will find a full disclosure and a note to that on the contingent liability side. As the case develops and our assessment of the situation keeps on evolving, we would assess whether it is probable, likely, etc., and give it the treatment accordingly.
Can't say much, boss.
But are you likely to take any charge on the earnings going forward?
Can't say much.
Thank you very much, Himang.
So, leave it.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.